Good evening, everybody on Zoom, and let's get started with our webinar this evening. Expats Portugal on a Thursday evening. Experts talking to you about every aspect of moving here to Portugal tonight. The mortgage essentials, including the impact of having a low or zero credit rating as a new resident, which of course is what happens when you're starting afresh in the country. What the typical age limits are for mortgage applications, the types of mortgages available, examples of costs, rates, and duration, and how pre-approved pre-approval can streamline your property search and buying process. And of course, Jeremy Klingers can tell us all about that this evening. Can you start, please, Jeremy? Thank you for being here. Welcome to you. Tell us a little bit about yourself, if you will, and your company.
Yeah, well, thank you for having me. Thank you for everybody who's present at the moment, listening to me and Carl. So my name is Jeremy Klingers. I have a Portuguese mother and a Dutch father. I was born and raised in the Netherlands, but 5 years ago I decided to move to Portugal. So yeah, I'm here in the Algarve, sunny Algarve, and since then I started helping non-residents obtaining mortgage financing in Portugal and Spain, but we are here for Portugal, obviously.
Yeah.
And that is my specialty. I help non-residents normally. Obviously, I also help residents, Portuguese natural-born people, or Portuguese who are elsewhere and want to return to Portugal.
Oh, yeah.
Also possible. But the majority of my clients are non-residents.
Okay, excellent. Right. Okay, so let's get into it then to some of these important questions that we've thought about as some of the frequently asked questions, the FAQs, if you like. And I would urge you in Zoom to get your questions in quick, because my experience of the mortgage webinars is that they're fairly brief. It's quite factual, and the information gets covered. So if you've got a particular question or a particular angle that you think is a bit unusual, don't wait, just pop it into the chat and I'll get back to it. But we will do the sort of universal, the generalities first, and then we'll come back to those more personal things. And then we'll stop the recording or the streaming going out onto YouTube, and you'll have a chance to ask a somewhat more personal question in a more intimate setting on Zoom as well. So you have that option. But yeah, if you've got any general questions that you'd like to have answered tonight about financing your property here in Portugal, pop them in the chat, either over on YouTube or here, especially with our Expats Portugal premium members on Zoom here. So that big question. You're new in the country, Jeremy, and you're going to have a zero credit rating. Right? You're starting afresh in the way that when you become a citizen, you have a birth certificate. It's like being a baby again financially, isn't it? So how does that work?
Well, usually my clients apply for a credit while still being in their own country, due to the income, because it's mandatory to have an income. Without an income, you can't have a mortgage in Portugal. Exactly. I sometimes get clients who have the lovely idea to start a new B&B or a yoga retreat, and they would say, "Oh, but we can base my application on expected future income."
Yeah.
I'm like, "No, sorry, we can't. But I already quit my job. Sorry, we can't. You would need to have at least 1 year, 1-2 year history of earning an income before we can apply for a credit. If there's no income, if you're just living off your savings, that's nice. You're in a nice position, but we can't help you with a mortgage there." It's
that would be a business loan, if anything, wouldn't it, rather than a mortgage, a conventional mortgage?
Yeah. Well, different type of setting. Yeah, but the general rule is you need to have an income. So basically, or either a digital nomad, for example, or either apply for a credit whilst you're still in your own country, having an income out of employment or self-employment. That's just the important message.
Okay, all right. And so, but the problem of having a zero credit rating, how does that work? Where do we start with that?
Yeah, well, it is actually not a problem because we are going to base your application not only on your income and on the fact that you have sufficient own funds to complete the purchase, because banks never finance the full amount of the purchase, obviously. So we're going to look at your current rating in your current country. Okay, so
Right.
for example, a UK resident or a US citizen would pull his or her Experian credit report or
Yes.
uh, TransUnion or any credit report, and that's the report we're going to base your application on. If on that report you have some credits, but your scoring is at least good, but it needs to be a minimum of okay, okay, good, but obviously we're looking for excellent or anything, above okay. Then you're good to go. If
Right.
if with all the credits you currently have in place and the future Portuguese mortgage repayment, which you're going to have, the capital repayment plus the interest, if you pass the debt to income ratio test, which banks have here. Okay, but a zero credit rating doesn't make any difference. In fact, it would be a good thing because you don't have any credits, so you have more to spend on your
Oh, very
Portuguese,
good.
on your future Portuguese mortgage. Yeah.
Okay.
So that's a positive thing. In
Yes.
some countries, I know that, for example, the states they work with, the more credits you have, the better your credit scoring is.
Yes.
We prefer less credits over here, um, less credits instead of more credits just to have a good rating. So it's a bit contrary.
Very good. Okay, so a couple of things there. Obviously, the lenders are looking for okay or above, ideally excellent. For people who have had a difficult past, for example, are there extra guarantees that could be made or other workarounds to help people with poor or low credit ratings? Or is that an area that you don't really work in?
Um, well, yeah, it is my area, obviously,
Right.
because it has to do with everything has a story.
Yes.
Okay. If it's explainable why your rating is poor or bad, or why, or that you already have canceled your back payment, your default, okay. If it has a logic story and you can show proof, then obviously banks are willing to look at the and consider the whole picture. But
Yes.
if it's just you being nonchalant and yeah,
Errant. Yes. Okay,
I
forget it.
don't want to, I don't want to pay, then you're going to get a no from banks here.
Yeah, quite right. And a waste of everybody's time. Okay, fair enough.
Yeah.
And then when you do start borrowing money here in Portugal, is that when you begin
And
your credit
that's
history and
everything.
score here?
You put that in a
Exactly.
Right,
clean film or
Uh,
that
just
point.
get a foil and say we
Stuart, I
open
need you
the
to mute up over there if that's all right. I can't find you to do it on your behalf. So if
uh,
you could mute for
yeah,
me, Stuart,
he
that'd
is
be
muted. Yeah.
okay, excellent.
Sorry. What was the question?
It was the beginning. As soon as you start borrowing in
Oh
Portugal,
yeah, exactly.
if you're awarded the mortgage, then you start your credit history there and then.
Exactly. Actually, you already can start building a relationship with a bank by just having a checkings account, savings account, investment account. So you already would start building a relationship with a bank, and that could be beneficial to you if you apply for a credit later on with them, because you already have a history and you are their client and you're already bringing them money. So to put it easily,
Well,
yeah.
that's an
So
interesting
that,
point. Yeah, I hadn't thought of that because people will have
you know,
to most likely have opened an account to move
yeah.
to Portugal.
So
So, yeah,
imagine you're here, you're here, and you're looking at properties and you already have your NIF number and you open an account with a bank, but for some reason you don't find your property or a suitable property for you, so you go back home, and a year later you try again, but you have opened an account, a checkings account, and you might have some savings or what we call a PPR, pension retirement plan. Yeah, then you already have then you're already 1-0.
yeah, absolutely. I can see that. Yeah.
Yeah. Yeah.
Is there anything else people should bear in mind with that? Because yeah, they'll have opened their account, won't they? For perhaps, for example, a D7. Should they be
Hmm.
should they be creating a lot of cash flow and showing very healthy net worth in there to improve their future prospects?
Sure, sure. And also, if we talk about currency, if you're a Brit with pounds and the euro might be strong, it could be beneficial for you to have a euro account. For Americans who are with the dollar, etc. So that might be beneficial as to why to have a bank account here in Portugal, but also just like I said, to already start building a relationship with that bank.
Yeah,
It might make a small difference. Let's say that they are studying your case and that you're just on the verge of, it's too tight, everything is too tight.
Mais ou
They
menos,
would
yeah.
they would say no, but
Yeah.
if you have a history with them and etc., then they could say, yeah, because this is our client and he or she already have a year history with us, bringing money in, and that could sometimes help you.
Good to know. That's really good to know. So that's all about the credit rating and credit history. That's very helpful. Thanks, Jeremy. Big question always, age limits, typical age limits for mortgage applications. And of course, with the retiring or the retiree demographic, generally speaking, we're talking about the higher end of that and moving towards those age limits. What are they?
Yeah, so officially the age limit which the Central Bank of Portugal has set is 80. However, all banks in Portugal, the Main Street lenders, they go to until the age of 75. We have one bank who does, in some cases, go to the age of 80. But that's usually not for non-residents. They have a harsh set of rules to get a mortgage up until the age of 80. So in general, my answer is always until the age of 75, and banks always consider, if we are doing a joint application, banks always consider the oldest person.
All right. Okay, that's
so
good
if
to
you
know.
are 70 and your partner is 60, then you would still have a 5-year term on the mortgage instead of a 15-year term.
Interesting. Okay.
In very small, some cases, if let's say your partner is the main income earner and she's 60, I'm not saying you look like 70, Carl, but just
it's okay.
let's say your partner
that
is
hadn't
60.
even occurred to me until you just mentioned it, Joe. We were going so well.
Yeah, I'm sorry. Then we could, possibly ask for a 15-year term because your partner is 60, and then
a little bit of room
the main income earner.
Yes.
But also, again, it's not just guaranteed. Usually we just have to stick with the age limit of the oldest person.
Brilliant. I won't put you on the spot and ask you how old you think I look. And my partner is younger than me, so that I've made a mental note of that, which is great. And that was for Leicester. Thank you everybody who's chatting in the chat tonight. Good to see you here, Joanna in Ireland, Barry in Los Gatos here, but partner visiting Covilhã up near the snow. We've got snow in Portugal as well, in the Serra da Estrela mountain range. There's some deep snow up there that your partner might be seeing that on the snow-capped hills. Leicester's in Lisbon, who had that question about 70 plus mortgages. I think that's probably everything to say about that, isn't it? In terms of age limits, right, Jeremy? It's hard and fast, really, isn't it?
Yeah, exactly. The maximum term is always max 30 years if you're non-resident. So
yes, okay.
If you're 30, then it's 30 years.
Yes.
Okay.
Well, let's go into that then. Among duration, the types of mortgages that are available, because I think they're pretty straightforward here in Portugal.
It's so easy. It's so
right,
easy.
okay.
And actually very complicating sometimes.
Right.
But it's easy. There's only annuity mortgages in Portugal, which means that it's always capital plus interest repayment. So at the end of the term, you are completely debt free, which is a huge positive thing, obviously.
Yeah.
But yes, sometimes it makes for a higher, always it makes for a higher monthly installment, especially if we have clients who are used to buying interest only mortgages, or buy to let, etc. And they are used to their system. But yeah, there's only one product here.
That keeps it nice and simple, doesn't it?
Exactly.
On that basis, and you said it's a 30-year term as well. Can you give an illustration for example, on an amount of borrowing? Is that possible to do for us tonight?
Sure. Let me just quickly open up my website.
While you're doing that, we'll say good evening to Debbie as well. So excited! Fantastic news here from Debbie. Yesterday, I got my first residency card. And I got my NHR as well. And my roommate arrives tomorrow. So well done, Debbie. Big fan of Expats Portugal. We're so delighted to have played a little part in that, Debbie. So excellent. Thank you for sharing that news. Rory's in Utah this evening. Debbie's lived there as well. And how can I forget? The fourth milestone was renewing my Expats Portugal membership. Well done, Debbie. Nice little prompt there. We didn't ask Debbie to say that. That was a complete surprise. And anyone else in that condition might consider doing the same or becoming a member this evening and joining us over here on Zoom, where we'll be hanging out with Jeremy after we've stopped streaming on YouTube. So have you got an example for us there, Jeremy?
Yeah. So what mortgage amount were you thinking?
What an amount? Are you do you want me to pick a
Wasn't
number?
that the question?
Yeah, I mean, it would any example of a cost and rate illustration example could be useful. Half a
Yeah,
million?
sure. 500,000. How old are you, Carl?
I'm going to chuck it around. Let's say I'm asking for a friend, and this
Okay,
person is 50, Jeremy.
50.
Yeah,
Okay, okay.
in
So
an
then we
ideal.
would have a
Actually, no.
25.
Let's go for 60. Let's go for 60 because that might represent our demographic a little bit better.
Okay, 60. So then we would have a 15-year term.
Yeah.
Let's say the current interest rate for an average a 3-year fixed mortgage, 3 to 5 years, is around 2.75, which is really low.
Yeah.
You would have a monthly installment of 3,393 euros capital and repayment, and this is excluding any insurance premiums or the cost for having a checkings account, etc. So I would say this would be rounded up to around 3,500 euros a month.
Okay, for half a mil there. Okay, well, there's one illustration for you, and obviously we can ask for more when we talk to Jeremy a little bit later on after we
Sure.
stop streaming.
And you can use my free tool on my website. Just put it in the chat. You can just use the calculator, play around with the figures. It's really easy.
Very good.
If you want to play around with it, use and have a general idea, just use an interest rate of around 3% to have a general idea about what you would repay on the mortgage and on the monthly installment, and what your interest would be in this 15 years. For example, in this example, it would have been 110,000 euros, 795 in interest you're going to pay on a 500K mortgage.
Yep, that's really helpful. Thank you for that. As a for instance, and a couple of important things came up there. The interest rate currently, you said 2.5, I think. Did you say, or 2.75?
No, 2.75. Yeah,
2.75. Sorry, I was trying to push you for a discount there.
Yeah,
So
exactly.
2.75 is the current rate. Then of course subject to fluctuation. But as you said, I mean that's pretty amazing, isn't it?
Yeah, it is. It is. We're going back to in Europe we have a thing called Euribor. You might not have heard of it because it's a Europe thing. The Euribor, very simply put, is the rate in which banks in Europe lend each other money.
Yeah.
The lower the Euribor, the more favorable it is for us. Okay, as being a consumer, taking out the credit, because the lower the Euribor, the lower our rate is. So the Euribor, like 4 years ago, no, 3 years ago, it shot up. It shot up from it was negative 0.500 in February 2021, and then it started going up until positive 4.15%. And what happens is, if you are on a variable spread of, let's say, 1%, and you had the Euribor of February 2021, your spread would have been 0.5 because it was negative 0.500. So we subtract that from the 1%.
Yes.
If you're still on your variable rate, and we're looking at the Euribor of September 2023, so this is 2.5 years later, and it's positive 4.15%, that means that your spread at the time would have been 5.15%.
Yes.
So that's a big difference for a small timeline, because
absolutely.
2.5 years is not really long. So now it has gone down again. In October, it dropped to 2.691, and the general feel is that it will keep on going down for the next 3 to 5 years.
Yes.
But yeah, we don't we
That's
don't
not
know.
financial advice. That is just an idea in the air at the moment, isn't it? Or
Exactly. That's how the banks are currently buying their fixed rate, etc. This is why they can offer fixed rates for 2.775 for 3 or 5 years. That's just a general opinion, general feel, but it's never guaranteed, obviously,
No,
because
absolutely, absolutely. Well, that's really helpful. And you mentioned also insurance premiums. We'll come back to that because Diana's just adding on that. Euribor replaced LIBOR as SOFR did in the US after some questions about LIBOR's reliability and integrity. So thanks, Diana, for that input. Yes, insurance premiums, extra costs then on the mortgage. What are they likely to be and for who?
Yeah, that depends on which bank I would have to use for your profile, for your application. Okay. Because banks, almost all of them will always oblige life cover, and life cover can be expensive in some cases. You have the possibility to do life cover elsewhere, so you don't have to contract it to the bank. But what can happen is, let's say that the bank offers you a spread of 2.75 with all additional features included, such as life insurance, home insurance, having a checking account, etc.
Yep.
If you tell them, okay, but your life insurance is too expensive, I can get it cheaper elsewhere, and it saves me 20 euros per month, then they will say, okay, go ahead, you can have that one, but we will raise your spread. That could happen.
Yes. Or right, okay.
or you use a good broker, and me in this case, and he can negotiate a better, or
Very
he can
good.
use his influence and
There
his
might be a
connections.
little, there might be a bit of
Yes.
toing and froing with that premium, and you can help.
Exactly, and exactly. The broker really makes a difference there, because of the relationship he has with the bank. And I also work with banks who will not oblige life cover and still give you their best rate.
Very
So
good. Okay, another
yeah,
good reason to get in touch with Jeremy, who you can find in the Expats Portugal Business Directory, and you've put the link into the chat as well. You have, fantastic. That's great.
yeah.
That's the mortgage calculator on your
Just
website.
one more point on the insurance. The only
Yeah.
only insurance which I always say just keep that one with the bank is your house insurance. Okay, your property damage insurance. Because it's easier for you if something happens to your home, etc., that you have one person of contact who will take care of. If let's say that you have a flood or damage on your house on the outside exterior, then you just contact your bank, your account manager, and he or she will take care of you. And it's easier than having to contact 3 or 2 different entities. So I would
Yes.
say just keep the house insurance always with the bank. This will always also give me more power to get you a lower rate. But the house insurances are not so expensive here.
Okay, that's good to know. Yeah, well, in a similar way to health insurance, expect lower premiums on that. That's great. So on these headline points, the FAQs, let's talk about how important pre-approval can be, because that's going to be useful, isn't it, to get pre-approval before you start looking. Because some more and more real estate agents, I think, are getting switched on to asking people for proof of funds, so time is not wasted, and it's going to make the process a lot easier. Can you help with that?
Of course, because the pre-approval is part of the whole process. But it's actually not a pre-approval as you would know it in the UK or in the US. Like, if you speak to the wrong person, not the wrong person, but if you speak to somebody who takes it lightly,
Yes,
he will say, "Oh, here's a simulation," and you can use that as a pre-approval. But anybody can make you a simulation in 5 minutes. And that doesn't mean anything, because the documents have not been studied, the right questions have not been asked. So the bank person who is making the simulation doesn't even know if you're viable to get that mortgage for that sum in which you have a simulation in 5 minutes. So you might have the idea, okay, this simulation which I got in 5 or 10 minutes is a pre-approval, but it's not, because it's just for you to have an idea. I don't use the simulations that way. I only request simulations from my banks and the banks who I work with, for my clients once my bank contact has confirmed to me that he has studied all the documents, that he is of the same opinion as me, because I actually already assess a client's profile, and that he is of the same opinion as me, and that yes, this looks viable, and he wants to send the application to the risk department, to the underwriters for approval. Then I get the simulation, and that I would say, okay, you can use it as a pre-approval because your documents and your profile have been extensively studied by the bank. Okay.
Yeah. Okay. So much more official, much more meaningful.
Exactly. And the first assessment I do is based on my experience, based on I know how the banks work, how they look at certain profiles, what risks are involved, etc. So I ask a lot of questions on my form. For example, I have a lot of questions, because with that I can give you more certainty if you would be eligible for a mortgage, or sorry, no, this is a no-go. Or let's say you want to apply for 500k mortgage, and you come to me and you fill out my form, and I would tell you, well, based on this, I think that a 300k mortgage is your max, you know, and then you can browse for different properties based on that information. And it works. It works. I have a good track record. Don't believe me, believe my clients.
Excellent. Good.
The reviews
I'm
are
sure there are
there.
testimonials on the site that you can read, and
Yeah.
you may be able to speak to them via Jeremy. Who knows? Excellent. That's great. So those are the headlines, and I do have some other questions, but I want to make sure that people who've asked questions in our chat here over on Zoom get the information they need tonight. Joanna's asking about construction loans, Jeremy. So I'm assuming that means lending on a house that's not built yet or to build. What do you make of that? Can you help?
Yes, we can. Again, not with all banks. Not all banks accept construction loans for non-residents, but we can help with that. Yes, it's not an easy process. Also, not for my clients, because they have to have a lot of patience. Okay, and why would people do it? Because it's a bit cheaper than buying a property than which is already built. So if let's say that you would buy a house, three bedroom house, two bathrooms, which is already built, and you would pay 500k. If you would buy the plot and build the exact same house, exact everything the same, you would maybe in the end pay a total of 350k. You know, but this also the construction costs have gone up, etc. So, but you have to have a lot of patience for this, because we will need a lot of documents, and you would need to pass through a lot of channels to get not only on the approval side of the bank, but also from the municipality. You need to have an architect. You need to have a building offer from a Portuguese building company. All the licenses have to be in place.
We've got some more details on that, so we'll come to that after we finish streaming and we've paused the recordings. That's great for the start, though. In general terms, thank you for that. Should we open a Portuguese bank account? Ask Donna. Good evening to you, Donna. Good to see you. And get a credit card. I think you've covered that, haven't you? Yeah, open a Portuguese bank account for sure. You'll need to do that anyway, of course, as part of your process, and get a credit card. So the credit card part. How about that? Getting a credit card, you know, using it, paying it off, using it, paying it off. Is that all part of building the good score as well?
Sure, because you have transactions ongoing and they make money on transactions. So yeah.
Very good. Okay, so that's good to know, Donna. Thank you very much for that. Good news, Stuart. My wife's residency card finally arrived. Nice one. We managed to get our SNS cards in less than a week as well. That's fabulous. Well done, Stuart. I was still loving your advice and your contribution to our recent panel discussion. I still quote you on that, Stuart. People are only allowed to moan for the first little while when they've arrived, and then they've got to stop. It's fantastic. And I noticed Debbie freezing in Coimbra. I didn't see that before. And we'll come back to some of your other questions after we've stopped streaming as well, Debbie, because there's some interesting stuff in there. And maybe we need a webinar on winter in Portugal and how to cope with it, because I think it's going to be your first, isn't it? And maybe it becomes a bit of a surprise that you're freezing in Coimbra. Let's talk to you about that in a little while. What is a typical down payment? Of course, you mentioned it in passing, but yeah, the deposit down payment, how is that looking for Jeffo, who asked the question, please, Jeremy?
Yeah, good question. So I'll always keep in mind 30%, 20% down payment plus fees and taxes. And I always tell my clients to keep in mind an amount of 10% for the
Yeah.
fees and taxes. In the end, it's not really 10%. It's more like 8.55. It depends on property purchase price and etc. But if you keep in mind 10%, then you can always complete, and then you will be always left with money at the end of the line.
Yeah, that's really good advice. That 10% in costs. Yeah, really good. Thank you for that. And those amounts of down payments, I think you've covered that. That's fantastic. Greg, does receiving monthly pension payments and social security payments count as income for purposes of obtaining credit in Portugal? Can you address that, please, Jeremy?
It's a case-to-case basis.
Yeah.
If it's a guaranteed income from, well, so social security payments is always from the state, obviously, or if it's due to not being able to work, etc., and you can and we can show the bank that you have it for life until the end of, for life, or until pension, until your pension age, then yes, we could consider it. Maybe not for the full 100% because of its nature, but we can consider it, yes. So any type of income, a rental income, disability pension income, or pension income, etc., we can use. The only income we can't use is, for example, if you have child support benefits. I don't know if in the Netherlands we have that. If you have children, etc., you get that we can't use, or income out of any other forms of benefits like that. That's that.
Or risky
because
and volatile things as well, of course. Yeah.
Well, yeah, but if we can prove to bank that it's for life because you have a letter stating that you are disabled for work, or you don't need, then we can use that. Yes.
Very good. Okay, so I just 3 quickies then, so the recording isn't too long. I think you've covered many of the generalities in a very good way here tonight, Jeremy. So thanks for that. Fixed versus variable. Can you address that?
Yeah, fixed is fixed and variable is variable, so it might change.
Can you elaborate?
No, so you can. I'm guessing we're speaking about term and etc. So you can opt in for a fully fixed mortgage for the whole term, sure, or a fully variable mortgage.
Marcy was wondering, yeah.
Yeah, or you can opt in for a hybrid mortgage, which means you have a period of X years fixed and the rest would be variable.
I'm sure that answers that question. That's good. And Marcy's also asking, that 10% that you talked about of cost, can that be added to the mortgage, or does that need to be your own funds? Okay, nice try though. Nice try. Okay, very good. Inspections. We need to talk about inspections, don't we? How does that work? I mean, property, not of you.
Yeah.
You look really worried there. No, property inspections, Jeremy.
Yeah. So the valuation, we call it valuation because an inspection would be more of a technical, technical, and those are not mandatory and not common also. So yeah, if you want to do that, be my guest. Please do, for your own peace of mind. Do the technical inspection, but yeah, we can't do anything with that report.
Yes.
So the bank will send out the evaluator after your mortgage has been approved by the underwriters. They will send the evaluator. This is a evaluator not from the bank, but it's just a random picked by the system evaluator, so the banks can't influence the evaluator. They don't know who it is until the report comes out, and he goes, checks the property in, out, 15 minutes. He knows the value and he would give the value in the report. And your approval is always subject to the valuation of the property. What does that mean? In short, if we start with 100K of 200K purchase and the 70% mortgage is 140,000, we get an approval based on that. The value goes to the property and he says, well, this property is not valued at 200K, it's valued at 100K. Then the bank will say, well, sorry, Carl, we will adjust the 70% approval based on the valuation report.
I see. And so that's the important thing. It's the market. It's about the market. It's about the valuation. It's not about the soundness of the property. That's not a thing here. That comes as a shock, I'm sure, to many people.
Oh yeah, well, to me also, like,
right.
you know.
Right.
I've seen properties where I told the client, "Are you really paying that amount for this?
Yes.
This will never come back. I'm sorry, I don't think that it will." And then it came 60, 70, 80K above value. And I was like,
Really? Wow. There's
how is
no,
that possible?
yeah.
They still needed to renovate everything because the paint was coming off the walls, and it's like,
Okay. So it's
okay,
quite random then.
yeah,
That
yeah.
way.
And in this case, it's also good to add, since we're talking about valuations, if the value of the valuation is higher, then we will still have to stick to the lowest amount, which is the purchase price. So you won't get 70% of the higher amount. Okay.
Again, I bet clients have said, "Well, hey, hold on a minute, Jeremy.
Yeah. Yeah.
Can I-"
Yeah.
No.
No, you just get a congratulations for a good purchase. Yeah.
Yes, absolutely. Yeah, kudos to you, but no financial benefit at that point anyway. Right. Final question, and also anything you might want to add yourself. And I will get to, there's some great questions and points in the chat. We'll come to those in just a minute. Jeremy, the best case scenario of applying, well, not applying, but making an inquiry with you and actually having the house, that, the best case scenario of that process, how long is it going to take?
From first contact with me until notary signing,
Yes.
in best case scenario, 6 weeks.
Wow. Okay. All right. And of course, with so many variables in that mix, it could take a whole lot longer. And
yes.
Yes. And does.
Unfortunately, I depend on a lot of people.
Yeah. Yeah.
Yeah. So
that's good. That's good to know about that process. And you can reach out to Jeremy in the Expats Portugal business directory or in the link that he's very kindly put into the chat. Before we pause.
And it's free.
And it's a free first consultation. Anything else that I've missed or should have asked you that you wanted to share tonight before we talk about more particular circumstances with people?
Well, we covered interest rate, we covered terms, we covered max lending limits,
And rate.
And rate. Yeah.
We've covered a lot of territory. Good job.
Yeah, we did. Thank you. You too. I think you always have I can tell you a little bit more about. I can go in depth about the fees and taxes, the costs associated with.
Yeah, please do that because that's very helpful.
Yeah. So there are two. The majority of your costs will be the property transfer tax, which you always have to pay. And there are two different tables in that. There is one for purchase of your main residence, and there is another one for your secondary purchase, your property which you want to go to rent out, etc. Okay. Yeah. My clients, being non-residents and obtaining a mortgage, is always subject to the second one, even though that they are buying their main residence, even though that they might, move to the country, etc. Why are you being considered a secondary home buyer as a non-resident? The answer is simple. You don't have any tax returns. You don't have any income tax returns in Portugal yet, so you're always considered a second home buyer. So the interest rate, the property transfer tax is slightly higher than if you are buying a main residence. If you are a Portuguese natural born living abroad already for so many years, and you don't have, let's say 10 years, you've been outside of Portugal, you have not been declaring your taxes here, then you get the benefit of being a Portuguese natural born, and then you get a slightly lower property transfer tax, because then we can consider a main residence from the start because you're Portuguese.
Very good. Okay, and NBP, natural born Portuguese. It's got a lovely ring to it. That okay. Any other costs through taxes?
Yeah, I always advise, please consult a lawyer. Have a lawyer by your side. A lawyer usually charges 1%, maybe a little bit less if you're a good negotiator, but stick with 1%. Then you have the valuation cost. The valuation doesn't cost that much, but it's still a cost. You would have the legal fees and the notary fees, etc. So that's why I said it all sums up to around 10%. Those are the fees. You don't have any bank commissions. That's nice, because in Spain you also pay 1% bank commission, for example. It's really just the legal fees, notary fees, and the property transfer tax is the biggest one. and your stamp duties on the mortgage amount and on the property purchase.
Excellent. Okay, well, on the matter of legal costs and legal support, funnily enough, next Thursday, 21st of November, we're talking to Daniel, and the webinar next week is legal tips for buying property in Portugal. So chances are, if you've been interested in this one, you'll also be interested in next week's webinar with the wonderful Daniel Reyes, who'll be joining us on the Dream Team session in about 3/4 of an hour, and the link is in the chat. Thanks, Astrid, for that. Jeremy, I think that's it then, isn't it, with costs and taxes? So we'll say goodbye for the time being. Not to you here on Zoom. We're sticking around for you and with you on Zoom. I'm just going to stop the streaming over onto YouTube.